everybody, welcome. It is March the 3rd. It is 3:30 in the afternoon or thereabouts. The stock market is open and falling because of Trump's tariffs, which are a terrible, terrible surprise to people. Who knew Donald Trump, tariff man, would be actually inflicting tariffs on our friends and our neighbors, north and south? But that appears to be the case. What do you think is the important thing out here, Ryan, that you're focusing on?
Yeah, I think it's the question is whether it's a growth scare, or it's something bigger. Obviously, we all seen where the 10-year has gone. It's about 418 as we record this, which is down, from 450. I've said last time we spoke about this, if we get below that 430, 435 level, we really have to consider if something broader is happening within the economy. We've seen the Atlanta GDP now numbers. It's come down from 2.9 to 2.3 to negative 1.5, and today it's at a negative 2.8, I believe was the latest reading. So the growth scare is certainly being priced into the economic data, at least here early on. I will say, just thinking about some of the positive things, we just came off of a strong earnings season. Growth came in around 17% overall. That's the strongest growth rate since the post-COVID recovery back in 2021. The other thing keep in mind is that earnings growth is expected to be about 10% this year. Of course, we could see the revisions come in as we get more and more information on these tariffs. But it does appear that the tariffs are the focal point of the market, and some of the themes that had been driving equities over the last 18 months, the AI, the additional need for power generation, are certainly taking a backseat to everything going on in Washington right now.
Well, one thing I certainly noticed as a bond guy is NVIDIA was out last week with earnings that were superlative, both in terms of revenues and profits, and the stock is down. It was down on the day, and it continues to fall, which, as a pocket technician, as Mr. Sohn would tell us, is when a stock that's highly valued responds that way to good news, it's bad news.
As our trusted IT expert Umberto says, that's not good.
That's not good. So let's go into the bond market here for a little bit. I didn't know that there was another revision downward in the Atlanta Fed GDP today. What was the reason for that? Do you know?
I'd have to look. I did not.
Okay.
I didn't dig into the details. I just saw the headline come
I did
across.
see in the inventory
Probably
number,
the ISM number is probably
which had a big increase in gold imports into the United States. So that's going to screw things up a little bit from a GDP point of view, because that acts as a negative mechanically to GDP. But in reality, it's just because there's an arbitrage now between London and New York that might be $50 or so that's bringing gold into the United States. But that's worrisome. The curve here is flattening. It was at 24 this morning. It's at 18 right now. Do you think the curve inverts? Coupon curve inverts? And does it matter?
It's not. It was. Think about it. It was inverted. Think how long it was inverted for, and it didn't matter. I certainly think it's on a lot of investors' radar here. The other thing, which I think was a big change, actually, was a sentiment from our Boston trip, our dinner in Boston, where the question about the 10-year, where the 10-year trades by the end of the year was, I think it was at 409 was the average, which was about 20 basis points lower than where it was during the dinner last week. And so I think that was a change in sentiment, and that's actually, that's playing out already. If the curve inverts, I just don't know what the message is, because it really hasn't provided us the same message that it has historically provided over the last.
So you would, it didn't work the first go around. It might not work.
Yeah,
this go around. The coupon curve might invert. The policy curve, as Don Rissmiller calls it, is already slightly inverted, probably a little bit more inverted today, and that suggests that the Fed should ease a little bit more.
Yep.
We get a weak payroll number on Friday. Consensus Bloomberg there is about 160. That might.
There's certainly some cover for the easing, which investors hadn't been pricing in, because the inflation is actually becoming is starting to become sticky and starting to cause some concerns. If look at the ISM today, the prices paid component was up significantly, and new orders were down. So that's probably the challenge that the Fed is dealing with right here. And if I don't know how much, I wouldn't say the labor market's weakening materially, right? We had initial claims were at 240. That's not anything to be overly concerned about. But we'll have to watch that over the next couple of weeks.
I want to get Todd into the discussion a little bit, but on CPI, let's just talk about the mechanics, who's Don again has talked about this as well. Housing's a big component, rent's a big component. Rents appear to be flattening out or falling. There was a big long story on Bloomberg that Austin has been down now for 9 consecutive quarters, It has had the biggest boom, which incidentally, friends and neighbors, it tells you that when you have limited zoning restrictions, you can bring on new supply fairly quickly and ease the housing crisis, which is happening in Austin. But I had a friend in Miami, I was there a couple of weeks ago, and he's a real estate guru, and he's telling me that rents and prices in Florida are beginning to get very, very toppy. Rents, importantly, because in the Miami area, everything was bid up for Citadel, and now that demand's coming off and prices are coming off. And then the New York Post did a story over the weekend about this issue of assessments for real estate in Florida. To shore up the buildings to make sure they're safe has required these assessments in condominiums where a lot of people are older on fixed income. They may or may not have the money, but it's totaling either thousands or hundreds of thousands of dollars, which is further putting downward pressure on price.
Well, housing will be interesting though, because if the 10 years coming down, that should bring 30-year fixed rate mortgages down. And a lot of, and myself included, I would say one of the biggest impediments was the level of rates for mortgages. So
Yep.
if we get a lower 30-year fixed and we don't see a reacceleration in any housing activity, that might be a stronger signal that we're actually heading in for a longer soft patch than most anticipate.
So Todd,
Is that not great for the home building stocks then? They've been weak.
Yeah.
well, I think, the problem with home building stocks is going to have to deal with Canadian softwood tariffs,
Yeah, the
right?
tariffs
the
on the
cost
wood,
of
yeah.
material are going to be going up. But Todd, this morning we talked about with some comfort that we're not going to head to any significant weakness here because corporate spreads have not widened out. The high yield market and the private credit markets now are about the same size. Maybe private credit's a little bit less than high yield. It's about 1.8, 1.7 trillion, depending on who you talk to. You and I were discussing a ETF in private credit. Apollo, tell us about that ETF.
So there's a brand new ETF that is turning into a little bit of a PR disaster because it was allowed through the SEC, became effective, started trading, and now all this backlog of information is coming out about issues with the fund and how they're valuing the private assets in it, as well as the naming of the fund. State Street Apollo. Apollo's involved with it, but is not managing the fund at all. They're just giving inventory to the ETF when needed for the exposure.
So it's not really how much private equity?
Well, right now there's
private credit will be
5% right now. Apparently, it can go up to 35%, but fund rules say you can only go up to 15% if the instrument is illiquid. Basically, it can't be liquidated in 7 days.
Fund rules, they're SEC fund rules.
Yeah, 40 Act fund.
Okay.
But so presumably Apollo can provide the liquidity themselves with a revolver.
They're supposed to. Now, the original
You
perspective.
can't really get your banker on the phone. Hello, hello.
The original perspective was very sparse on details. All this correspondence that has come out in the last couple of days says that they will give 3 bids per day with 15-minute clarity. That's not that much.
3 bids per day with 15-minute clarity.
Like
So, like,
Now,
15-minute interval.
help me understand. So the biggest high yield junk ETF is, I think it's JNK.
Yeah, J&K or HYG. I forget.
Okay.
Varies
So
by the day.
put in comparison, what is the yield of Apollo?
That's
Is there leverage in that fund?
well, they have CMOs, CLOs, asset-backed security. So I think yes, right. Not leverage.
Not
They're
directly, but
le-
indirect.
Yeah,
indirect.
indirect leverage.
Okay,
Right,
so,
direct leverage.
so what is the yield on the Apollo fund versus
5.4.
5.4? And what is the yield on JNK, let's say?
7 or so.
Really?
Yeah. So
Well, this comes down to the holdings, right? Didn't you just
yeah,
mention
the
they're like
holdings are
30% treasury?
the
What is it?
majority of the holdings. There's a lot of treasury and cash,
Yeah.
and then there's a lot of standard corporate debt, like AbbVie, something like that, or Micron is in there. It just has it's a big deal because Apollo's involved, who's a private asset manager now becoming into the ETF spectrum, and because they're trying to put private assets into a liquid wrapper, which really doesn't work. So there's a lot of consternation on this and trying to jam it in, and it seems like a little ugly right now because the SEC is coming out with all this information of how it was not addressed. And the weird part is why the ETF is still trading. It should not be trading right now, I think.
You think they should have suspended trading? Who's the State Street's the manager?
Yeah, State Street. Yeah, Apollo. It just seems very strange to me. It's an unusual event. So we'll see what happens. The other interesting part is I looked up the holdings from the Apollo portion of this. And you can't find anything on them. It's like a Jason Bourne case here. There's no information.
There's no information on the company.
So the Apollo holdings are listed as basically Apollo LLC with some code name. And if you Google it or put it in AI, there's nothing. It is literally there's no information on these holdings, so you have no idea what you're buying. So you're supposed to trust what they're saying, basically. Which I get it, but see how that can go.
Well, in my history of this business, when they have difficulty pricing the asset sells at a discount.
Yeah.
And the banks really don't pick up their phone. And that, incidentally, one bank that is always in the newspaper for bad things, Citibank, this past week, you saw, I think they were supposed to send to Brazil $283, and they actually sent $1 trillion or more.
80 trillion or something.
I would ran with it. Yeah.
Unfortunately, they discovered they're ever in 15 minutes. Otherwise,
Yeah,
somebody
and
would have
it's-
purchased
it
all of
was the-
San Paulo real
It was the
estate.
third person who spotted the
Yeah,
error.
it's third. That bank is just a mess. Now it's outperformed the other big bank
Done well,
this
yeah.
year.
Banks, financials have been a sector to hide in here. I know it's been challenging to find a place to hide, but the financial sector certainly has been one of them. Insurers have been.
Listen, the best place to hide in a bear market or any worries about things is tobacco.
That's true, yeah.
Do you know what Philip Morris International is up year to date?
A lot.
Does anyone know?
I don't know the number, but I know it's up a lot.
They're over 30%.
Wow.
But so we could talk about that for a second here. That's not because of traditional smoking cigarettes. That's because of their smokeless tobacco.
Correct. Yeah,
which
Zyn.
is a huge
It's not even
trend.
smokeless. It's a huge. I haven't done it or used any myself. I don't know. Do you say you've done it, Zyn? But
Zyn.
the kids love it,
Yeah, it's
and evidently there's not a downside to it.
Oh,
we'll find out.
Well, do we know if there's a downside? I mean, does it keep you awake?
It definitely is.
I mean, it's right. I think it's just pure nicotine. I don't know. I've never.
It's not. It's pure nicotine. Yeah,
Yeah.
I think that's what it is. But evidently they're running out of production for it.
Yeah, they have. Yeah, that's.
Do you know if the Sinaloa drug cartel gets a hold of Zyn, it's going to price it less. Todd, let's also talk about gold for a minute. Gold had a big day today. It's up $55. Is there anything?
There's no change to the gold's trend.
So the trend
It's
is
still up.
up.
It's one of the best trending assets out there. My concern is now you're finally starting to see the ETF flows pick up. So it must be retail.
So
or something.
GLD is finally picking up.
GLD and IAU, which is the iShares, just basically copy product. On Friday, that had its largest inflow in history. GLD just had its largest inflow in history.
On Friday.
IA was Friday, and then GLD was a couple days prior to that.
Do you think
So
that's
people are
asset allocators late to the game
It's
finally throwing money at it?
It's possible. The only
Is
issue,
it retail?
I think it's retail, and the only reason I would say it's possible, possibly not asset allocators, is because there are cheaper options from those same companies, which are going to be the more asset allocator friendly one. Right? If I'm investing for the long run, I'm going to go for the cheaper ETF. Those are more for quick money. So,
But on a relative basis, even though it's pulled off the highs here on a relative basis, relative to what you could be in technology
Oh,
or
yeah,
it's been outperforming. So
yeah.
maybe it's just a relative trade. Investors are trying to find a place to hide as
Now, is there retail sentiment on gold?
So I use flows, and then we get not necessarily a retail survey, we get a survey every week on percent bullish for
Like
certain assets.
was it Market Vein or Investors Intelligence?
Consensus Sync.
Consensus Sync.
And
And what-
the same thing.
what is
The gold bullishness is also skyrocketing.
Do you know what? Is there a number associated with it?
97% or something like that?
No way.
Right.
97% bullish on gold?
So you were also in you were on the Pacific
Yeah.
Northwest, right? What
You guys had the easier trip this week.
I don't know about that.
or you were in Oregon.
I went to Oregon and Washington.
And how is Portland doing?
Well, I was only in Portland for less than 24 hours. It was lovely.
I was in Shanghai.
It was raining.
I give the world my views on Shanghai. 36 hours.
So I think our clients, I think they were confused. Like they, the volatile headlines, and that's reflected in policy uncertainty, and tariffs, all that stuff. I think that just makes them confused, like what to do now. And clearly, tech is having a problem, so that makes it even more of a hit.
It's this Washington uncertainty is just dominating every
do
conversation.
you really think IT is Washington uncertainty, or is it technological supremacy uncertainty? Is it
Well,
Deep
tariffs
seek.
tariffs on China or Trump is dead set on tariffs on China, right? He said additional 10%.
Listen, he
And-
would tariff Grenada if he knew that
Yeah,
they produced sugar.
but there's at least some ability for other countries to negotiate. Now he actually just a half hour ago, he said there's no room for negotiations on what's going to be implemented on Canada and Mexico. But there are no negotiations associated with China. He's dead set on putting tariffs on them, and that appears to be, that's going to affect the tech sector at the end of the day.
I'm of the view that tariffs in and of themselves are not inflationary. They raise the price level, but unfortunately, it's like the price of eggs. The price of eggs go up, and everything else can stay the same. It's a supply shock. It makes people poorer, and it eliminates your choices. I'm surprised there's not been more rhetoric about tariffs on Japan, for example.
Well, it's been very little on Japan.
Why do you think that is?
I just think he hasn't gotten there yet.
Let's go down the alphabet. A, B,
Can't
C.
fish, right?
C.
Incidentally, the Trump effect in Canada has completely changed the prospects for the conservatives in Canada.
Yeah.
Looking at the most recent polling data, they are now either neck and neck with the Liberals, or the Liberals are slightly ahead, which I think would be a bad outcome for Canada. But there's talk that they bring even Paul Carney in as the prime minister, a clean sheet, responsible and ethical man as he's known for. He's also big into, I think he was at Barclays or the Bank of England, promoting green technologies, which last week, let's face it, was a very bad week for green initiatives. Mr. Market figures this out, but in Oklahoma, which is a windy place, it's flat, there's dust all over the place. It's where Landman, or close to Permian Basin. They had a wind farm where one of the wind towers was blown over on February 25th.
Like a movie.
Oh, I thought you were going to say that they had to power via a diesel engine or something.
Listen, you had Nikola finally recognized for the fraud that it was in. Rivian stock is falling. The Financial Times had a great line about Lucid Motors, which makes ultra luxury cars, $100,000 plus sedans, and I think they're coming out with an SUV that's going to be priced in the same way. They said that the car runs on burning Saudi petrodollars because the Saudis are going to have to put more money in. Volvo swore they'd be 100% electric. They're abandoning that. Porsche looks like they're going to lose $800 million related to their EVs. In Investors Business Daily on this very day, year on year, used EVs are trading under used ICE cars for the same thing. There was a time when Elon Musk said that when you were sleeping, your car door would open up, your car would leave, it would go out and pick up drunken teenagers and bring them back to their house safe, and you would make money on that rent. You'd make money on your car. It's not working out. It's a bunch of bull.
Let me ask you this. This is I'm just throwing this out there. Why do you think, I know there's a lot of focus on tariffs now, but why do you think the rhetoric, if we go back to 17 and 18 and 19, when there was also the rhetoric on tariffs, why do you think it wasn't as problematic for the markets? I guess in 2018 we had the big sell-offs, and maybe that contributed to it.
18, you had a big drawdown in January into early February. S&P kept going higher throughout the year, but there was like a rolling bear market.
Yeah, that's true.
And
Yeah,
then-
so
then
maybe
eventually
it did play a role in that.
It's hard to say exactly what's going on, but it strikes, like for example, the European defense stocks are up double digits today.
Yeah.
I find it unbelievable that the European defense stocks, that people didn't understand that the Europeans had to spend more in defense. And the grim reality for the Europeans when it comes to this Ukraine battle is that they can't handle it without the United States. We have all the guns and the tanks.
But that you could also say that was Trump was the driving force behind that, right? In 17 to 21, when he wanted NATO to increase their spending.
Ursula, whatever her name is, Ursula Bush, blah, blah, blah. She was German defense minister for 6 years. She met with Obama.
Yeah.
Obama asked the Europeans, the Germans in particular, at the time were about 1.1% of GDP, to increase their spending on defense. And they said, "Oh, President Obama, we have such admiration for you. You're the most handsome man ever come to Berlin, other than John Kennedy, who was great way back when." And they promised and they never did. And now the wolf is at the door. I have very little sympathy, to be honest, for the Europeans. And I sort of agree that the United States ought not to be picking up the tab for all these guys who are happy to come to New York and lecture me on the poor standards associated with the New York City subway system.
European stock markets, though, very good.
They're doing well, but isn't this back to tech? If our market's 19% is tech and tech is weakening, is it? It's
Our market's 30.
Yeah.
It's 30% of the S&P.
Yeah. Excessive. Too many Zins.
Oh my God, Mr. Market's not getting any sleep at all.
So there's 7% tech exposure in one of the main European ETFs. and then you have 20% financials and 19% industrials. And
So what's the big name that's powering Europe higher?
well, the defense
SAP?
names, SAP, defense, and then the European financials for once are not actually causing an issue.
Okay.
It's like they went to school and are behaving.
Let's talk about China for a moment. The Chinese stock market looks like it's waking up. President Xi, I think, is talking about more stimulus to get domestic demand up. I don't know exactly how that's going to work. You know, the best thing the Chinese could do would be to establish a broader social safety net for their people so they don't have to save as much. But whatever he comes up with, there's a lot of talk about this rapprochement between him. Even Jack Ma was there, and they shook hands. Everybody looked each other in the eye, and maybe tech can run for a little bit longer over there before the CCP decides it's not in their best interest to let that happen. Maybe because it has something to do with they'll establish a congestion-free zone in Shanghai, and President Xi will stop that right away. What do you think is going on there? I know you and I share a similar view about investing in China.
This is nothing out of the ordinary where the market goes up 100% and we all get in and the rug pull happens. Okay. So, and it can go up another 50%, be totally normal.
Well, let's talk one thing here about oil before we go. Oil is also down sharply today. So the two things Donald Trump wanted to accomplish, and Scott Bessent has been talking about this, is oil and rates, right? CNN suggested that he wants to focus on the 10-year. It's a way of outsmarting the Fed. They had some snarky little story about that. New York Times this afternoon has a story saying, well, focus on the 10-year. It's rallying, but it's really because things are getting weaker, and it could be very well that's the case. The other one is oil. Oil is down. I saw somebody from the Atlantic Council interviewed on CNBC on Friday, and he said, well, you know, if Donald Trump, this disaster in the Oval Office, this means that one of his goals about establishing the dominance of the U.S. domestic energy industry won't happen because Russia will flood the world with oil and lower prices. He wants that.
Yeah.
I mean, you get lower oil prices, you get lower bond yields, you get lower inflation, and it spreads out through the entire system.
Yeah, but you have to. So I think what's happening today is I think OPEC said that they're going to go ahead with supply increases in April, which I think is what's driving down prices. But you also have to keep in mind that this trickles into profitability for corporations here domestically. Lower oil prices means lower profit growth for a sector that's already struggling. One of the things, you know, we've the three arrows of our Treasury Secretary is for $40 oil. But I don't think there's any energy company CEO who would be happy to say, okay, I'm going to punch more holes in the ground. It's just not in their best interest. That's one of the fastest ways to get share prices from down 10% a day to say you're going to spend more on CapEx. That's something we didn't even touch on here in this conversation, is that a lot of the technology sector is not as CapEx light as it once was. TSMC was just announced they're going to spend $100 billion to bring manufacturing to the U.S. Apple's, I think it was like $500 billion.
These are press statements. This reminds me of Foxconn in Milwaukee a couple of years ago, Wisconsin. I think
in upstate New York.
Well, in Buffalo, how'd that work out for the poor Buffalonians?
But nonetheless, we know where I was going with this is one of the fastest ways to underperform the overall market is to spend more on CapEx. We've had this chart, our work for 10 years where high CapEx spenders underperform, are serial underperformers.
Well, what about share buybacks? What about Boeing? I mean, one of the points Scott Bessent, who spoke before the Strategas macro conference just last year, talked about how Boeing management was happy to spend money buying back shares rather than engineering excellence. How'd that work out for them? Huh? You demand Airbus exclusively when you travel now.
Chris Garland and I saw the Boeing field in Seattle.
Pardon?
We saw the Boeing field where they test everything.
How'd it look? Any dent?
My travels last week was interesting.
Smoke plumes or anything like that on it? What a disaster. That's been a shame too. Anything else? Well, I think that'll do it. So, ladies and gentlemen, the two of you who are listening to this, we appreciate you very much. And please send it out and do a TikTok associated with it. You can link us. And we hope to visit you next week. Be provocative and hope when you're driving home that you're safe, both hands on the steering wheel. Good night.